Right now, something historic is happening in the silver market, and most people have no idea. While the headlines are busy talking about stocks, AI, and interest rates, silver is quietly setting up for a move that could shock the world. I'm not talking about a small rally or a temporary spike. I'm talking about silver moving past $100. And even more importantly, a physical shortage that is starting much sooner than anyone expects. If you think silver at $20 or $30 is normal, you need to listen very carefully to what comes next. Because once this shortage fully hits, it won't matter how much paper silver exists on screens. What will matter is who actually holds real metal in their hands. And by the time the mainstream media starts talking about it, it may already be too late for most people. Welcome to Silver and Gold Insider, where we break down what's really happening behind the scenes in the precious metals market. If you want honest, no-nonsense insights that most channels won't talk about. Make sure you like this video and subscribe to the channel right now. It helps us reach more people. And it makes sure you don't miss what could be one of the most important silver stories of this decade. Now, here's the key point most investors are missing. Silver is not just a precious metal. It is also a critical industrial metal. Every smartphone, every solar panel, every electric vehicle, and every data center expansion depends on silver. Demand is exploding from multiple directions at the same time, and supply is not keeping up. In fact, global silver production has been struggling for years, and new major discoveries are extremely rare. At the same time, governments around the world are printing money at levels we have never seen before. Inflation may slow down on paper, but the purchasing power of the dollar continues to weaken. Historically, silver does not stay cheap in environments like this. When confidence in fiat money fades, silver tends to move fast, and when it moves, it doesn't wait for permission. What makes this moment different is the growing disconnect between paper silver and physical silver. Futures markets can create unlimited paper contracts, but physical silver comes from mines, and mines have limits. We are already seeing delays, higher premiums, and tighter availability in the physical market. These are early warning signs, and smart money is paying attention. And this is just the beginning. To really understand where silver is headed, we need to talk about supply, because this is where the story gets serious. Unlike gold, silver is mostly mined as a byproduct. That means silver production depends on copper, zinc, and lead mining. When those industries slow down, silver supply drops automatically. And right now, many mining companies are cutting back because costs are rising and profits are shrinking. Energy prices, labor costs, and environmental regulations are making it harder and more expensive to pull silver out of the ground. At the same time, above-ground silver inventories are being drained faster than most people realize. For years, the market relied on stockpiles to cover the gap between supply and demand. But those stockpiles are not infinite. Recent data shows that major vaults are seeing consistent outflows. Less silver is coming in, and more silver is going out. That is not a healthy sign for a market that already runs on thin margins. Now let's talk about demand, because this is where things really accelerate. Solar energy alone is consuming record amounts of silver every single year. Governments are pushing green energy policies aggressively, and solar installations are breaking records globally. Each solar panel needs silver, and there is no real substitute that works at the same efficiency. Electric vehicles are another major factor. EVs use significantly more silver than traditional cars, and the push toward electrification is only speeding up. Add to this the massive expansion of data centers, artificial intelligence infrastructure, and military technology. all of which require silver for conductivity and reliability. This is not speculative demand. This is real, physical demand that cannot simply disappear. Meanwhile, retail investors are slowly waking up. Coin shops are reporting tighter supplies. Online, dealers are selling out faster than usual. Premiums over spot price are rising, which is a clear signal that physical silver is becoming harder to source. This is exactly how shortages begin, quietly, before turning obvious and chaotic. The most important thing to understand is that silver doesn't need everyone to panic. It only needs a small percentage of investors to demand delivery instead of paper promises. If that happens, the system faces stress very quickly. And history shows that when trust breaks in the paper market, physical prices can reprice dramatically in a very short time. This is why many analysts believe that silver above $100 is not an extreme scenario. It's a reflection of years of suppressed prices colliding with real-world constraints. And we are getting closer to that collision every single day. Another critical piece of this story is how silver has been historically undervalued compared to gold. For centuries, the gold-to-silver ratio stayed within a relatively stable range. Today, that ratio is stretched to extreme levels that we only see during periods of financial stress. In simple terms, silver is cheap, not because it should be, but because it has been held down by a system that favors paper trading over physical reality. When that imbalance corrects, silver doesn't move slowly, it moves violently. We saw a glimpse of this in past cycles, where silver doubled or tripled in a matter of months. But those moves happened when industrial demand was far lower than it is today. Now, silver is needed everywhere, and the margin for error is much smaller. There is also the issue of central bank behavior. While central banks are aggressively buying gold, they are indirectly impacting silver as well. Gold leads, silver follows, and then silver often outperforms. This pattern has repeated over and over again. Once gold breaks to new highs and holds, attention inevitably shifts to silver, especially from institutional investors looking for value and leverage to the metals trend. At the same time, the futures market is showing signs of stress. Open interest remains high, but physical deliveries remain relatively low, creating a dangerous imbalance. If even a fraction of contract holders decide to stand for delivery, the system could face serious challenges. This is not speculation. It's math. There simply isn't enough physical silver to back every paper claim. We also need to talk about investor psychology. Silver is known for being volatile, and that scares many people away. But volatility works both ways. When silver starts moving up with conviction, fear quickly turns into urgency. People hashing not silver because they don't miss out. That's when prices disconnect from models and move based on availability, not theory. This is exactly why the early stages of a silver bull market feel slow and boring. The real move happens later, when positioning is already crowded and supply is tight. By then, the easy gains are gone, and new buyers are forced to pay much higher prices just to get exposure. Right now, we are still in that quiet phase. But the signs are there for anyone willing to look closely. Silver is being consumed, inventories are shrinking, and confidence in financial systems is fragile. And once this shift becomes obvious, it won't be gradual. One of the biggest misconceptions about silver is that there will always be enough supply because the price can simply go higher and bring more metal to market. In reality, mining does not work that way. Even if silver prices rise sharply, it can take many years to bring a new mine into production. Exploration, permits, environmental approvals, financing, and infrastructure all take time. This means that short-term price spikes cannot quickly solve long-term supply problems. On top of that, of silver, or has been declines. Mines are digging deeper and processing more rock just to get the same amount of metal. This drives costs higher and reduces flexibility. Many miners are already operating on thin margins. And without sustained high prices, they cannot justify expanding production. This creates a dangerous lag between rising demand and available supply. Recycling is often mentioned as a solution, but recycling alone cannot meet global demand. Much of the silver used in electronics and industrial applications is not economically recoverable. It ends up in landfills or is lost during the recycling process. So once silver is used, a large portion of it is effectively gone from the market forever. Another important factor is geopolitical risk. Many of the world's largest silver-producing regions face political instability, resource nationalism, or regulatory uncertainty. Any disruption in these areas can quickly reduce global supply. We have already seen how fragile global supply chains are, and silver is no exception. A single major disruption can have outsized effects on pricing. At the same time, investment demand tends to surge during periods of uncertainty. When people lose trust in banks, governments, or financial markets, they look for tangible assets. Silver is unique because it is accessible to everyday investors, not just institutions. This makes it highly sensitive to shifts in sentiment. A small change in investor behavior can lead to a large impact on physical availability. We are also seeing a generational shift. Younger investors are becoming more aware of inflation, debt, and currency debasement. Many of them are looking for alternatives outside the traditional system. Silver fits naturally into that mindset. It is real, it is tangible, and it does not rely on a promise from someone else. All of these forces are building pressure under the surface. The market may look calm on the outside, but beneath it, the foundation is tightening. And pressure, when it finally releases, rarely does so gently. As we continue, it's important to focus on global demand trends that are quietly reshaping the silver market. Industrial consumption is climbing year after year. Electronics, medical equipment, solar panels, and electric vehicles are all driving a surge in silver usage. These are not temporary fads, they add long-term structural shifts that ensure demand will only increase. And because silver is finite, every ounce used for industry is one less ounce available for investment or reserves. One area that is particularly striking is solar energy. Each solar panel contains silver that is essential for its efficiency and conductivity. Governments around the world are investing heavily in renewable energy, aiming to meet ambitious climate targets. This creates a structural, sustained demand for silver that is unlikely to diminish anytime soon. Even small increases in solar adoption can absorb millions of ounces of silver per year, further tightening supply. Meanwhile, physical silver markets are signaling stress in subtle ways. Premiums at local dealers are slowly rising. Certain coin and bar sizes are harder to find. Long delivery times are becoming more common. These may seem like minor details, but they are early indicators of a market beginning to feel the strain of higher demand against limited availability. Smart investors watch these signals closely, understanding that they often precede sharp price moves. Investment demand itself is also rising quietly. While paper silver dominates headlines, more individuals are choosing physical silver for its tangible value. Coins, bars, and ETFs backed by real metal are all experiencing growing interest. People are waking up to the fact that holding actual silver is different from just owning a number on a screen. Physical ownership ensures security and liquidity in times of market stress. Another factor amplifying pressure is global production challenges. Many mines are experiencing rising costs, stricter regulations, and lower ore grades. Expansion projects take years, so even with higher prices, new supply cannot respond instantly. This lag between rising demand and production creates a natural squeeze. When a shortage becomes visible, the market reacts quickly because catching up is nearly impossible in the short term. Psychology also plays a role. When people notice tighter availability, their behavior changes. They start buying sooner rather than later, creating a feedback loop where demand spikes even faster. Silver's dual role as both money and industrial metal makes it particularly sensitive to these shifts. Unlike other commodities, scarcity is felt not just financially, but tangibly in every coin shop and bullion vault. At Silver and Gold Insider, we continue to monitor these dynamics closely. Understanding supply constraints, industrial demand, and investor psychology gives you a real edge. While many remain distracted by headline, news, and paper market fluctuations, the underlying reality is quietly shaping one of the most significant moves in silver history. What makes this moment especially dangerous for the silver market is how complacent the majority of investors still are. Most people believe shortages only happen overnight, but in reality, they develop slowly and then hit all at once. By the time the word shortage starts trending on social media or appearing on financial news, the real shortage has already been underway for months, sometimes years. We are already seeing subtle signs of stress. Delivery times are getting longer. Bulk orders are harder to fill. Large buyers are quietly locking in supply through long-term contracts. This is not something that happens in a well-balanced market. It happens when participants know that future availability is uncertain. Smart money doesn't wait for confirmation. It positions early and stays quiet. Another overlooked factor is how leveraged the silver market really is. The amount of paper silver traded daily is many times larger than the amount of physical silver that actually exists. This works fine as long as confidence remains intact, but confidence is fragile. One unexpected event, one major delivery failure, or one sudden surge in physical demand can trigger a chain reaction. If that happens, prices don't adjust smoothly. They gap higher, sellers disappear. Buyers compete for limited supply. This is when the idea of silver at $100 stops sounding extreme and starts sounding conservative. At that point, price becomes less important than access. This is why Silver and Gold Insider continues to emphasize physical reality over paper narratives. Markets can ignore fundamentals for a while, but they cannot ignore them forever. When supply and demand get out of balance, price is the only mechanism left to restore order. We also need to consider how quickly sentiment can change. For years, silver has been ignored, mocked, or dismissed as boring. But all it takes is one strong breakout, one sustained rally, and suddenly everyone wants to know why they didn't pay attention sooner. We've seen this pattern before in other asset classes, and it always ends the same way. Late buyers pay the highest prices. Right now, silver is still giving people time. Chimi to leap her. Time to think instead of react. But that window does not stay open forever. Markets don't announce their turning points in advance. They reveal them only after the fact. And when silver finally makes its move, it won't wait for consensus. Another layer to this story is the growing strain on the US dollar and global currencies in general. When debt levels rise faster than economic growth, something eventually has to give. Governments can cut spending, raise taxes, or print more money. History shows that printing is usually the path of least resistance. And every time more currency is created, the value of existing money is diluted. Silver has always acted as a mirror to this process. It doesn't move because it wants to. It moves because currency loses credibility. Even when official inflation numbers appear controlled, everyday costs tell a different story. Housing, food, insurance, healthcare, and energy continue to trend higher. Hejde amplifinuder over. This creates a quiet shift in behavior. Investors start looking for assets that are not someone else's liability. Silver fits that role perfectly. It doesn't depend on earnings reports, interest rates, or government policy. It simply exists, and in times of uncertainty, that simplicity becomes extremely powerful. We also need to address the role of banks and financial institutions. Many of them hold massive derivative exposure tied to precious metals. As long as prices remain stable, this exposure stays manageable. But rapid price increases can create stress across the system. Margin requirements rise. Liquidity tightens. Risk managers step in. This can amplify moves far beyond what fundamentals alone would suggest. At the same time, public trust in institutions is not what it used to be. After repeated financial crises, bailouts, and sudden rule changes, people are more skeptical. They are asking harder questions. They want assets they can verify, touch, and control. Silver checks all of those boxes. What's interesting is how quietly this shift is happening. There is no panic yet. No headlines screaming about silver shortages. Just a slow, steady change in behavior. More people choosing to hold physical assets. More people questioning paper promises. This is often how major transitions begin. Not with noise, but with subtle moves that only become obvious in hindsight. And by the time everyone agrees that something has changed, the opportunity has already passed. There is also an important timing element that most people underestimate. Markets move in cycles, and silver is no exception. Long periods of consolidation are often followed by sharp, aggressive moves. The longer the pressure builds, the more powerful the release tends to be. Silver has spent years moving sideways, frustrating both bulls and bears. That kind of behavior usually precedes a major trend change. What's different now is that this potential breakout is happening in a world that is far more fragile than in past cycles. Debt levels are higher, supply chains are tighter. Trust is lower, and technology-driven demand is far stronger. This combination makes the next move in silver potentially faster and more extreme than anything we've seen before. Another factor that deserves attention is how quickly information spreads today. Once silver starts trending, it won't stay under the radar for long. Social media, financial influencers, and news outlets will amplify the story. Retail interest can surge almost overnight. When that happens, physical supply can vanish quickly because it simply isn't designed to handle sudden spikes in demand. We've already seen similar dynamics in other markets. Assets that were ignored for years suddenly became the focus of global attention. Prices moved not because fundamentals changed overnight, but because perception did. Silver is particularly vulnerable to this kind of shift due to its relatively small market size. This is why experienced investors focus on positioning before the crowd arrives. They understand that the biggest gains come from being early, not from chasing headlines. Waiting for confirmation often means paying a much higher price. It's also important to remember that silver's role is not just about profit. For many, It represents insurance. Insurance against inflation. Insurance against financial instability. Insurance against policy mistakes. When viewed through that lens, short-term price fluctuations become less important than long-term protection. Right now, silver is offering both potential upside and defensive value. That combination is rare. It doesn't last forever. Once the market fully recognizes it, the balance shifts and the window narrows. The question is not whether silver will move. The question is who will be ready when it does. As we move closer to the heart of this story, it becomes clear that silver is no longer just an investment thesis. It is a reflection of a system under pressure. Every signal we've discussed points to the same conclusion. The current price of silver does not fully reflect the risks building beneath the surface. Markets can stay disconnected from reality for a long time, but when they reconnect, they tend to do so violently. What makes silver especially compelling is how asymmetric the setup has become. Downside risk is limited by production costs and physical demand, while upside potential is driven by scarcity, sentiment shifts, and monetary stress. That kind of imbalance is rare in any market. It's the reason seasoned investors pay attention, even when the crowd is distracted. We also need to talk about accessibility. Unlike many assets that require complex accounts or large capital, silver remains within reach for average people. This democratization is powerful. It means that when interest rises, participation can grow quickly. And when participation grows in a market with tight supply, price pressure becomes unavoidable. Another key aspect is how narratives change. For years, silver has been dismissed as outdated or irrelevant. But narratives are fragile. They flip when reality intrudes. Once silver starts making higher highs and holding them, the story changes from why own silver to why don't you own silver. That shift can happen faster than most expect. There is also a psychological element to scarcity. When people believe something may not be available tomorrow, behavior changes today. They don't wait, they act. This is why physical shortages, real or perceived, can accelerate demand far beyond rational models. Silver is especially sensitive to this because of its dual role as money and material. We are already seeing early signs of this mindset shift. More questions dot more curiosity. More quiet accumulation. These are not the actions of a market at a top. They are the actions of a market preparing for a transition. At Silver and Gold Insider, the goal has never been to create fear or hype. The goal is awareness, understanding how systems work, and recognizing when probabilities begin to favor change. Right now, those probabilities are moving in silver's direction. The final phase of this move will not be calm. It will be fast, emotional, and decisive. Now, as we wrap up, it's important to see the full picture. Silver at $100 is just the starting line. The real story is the shortage, the tightening of supply, and the increasing demand from both industry and investors. When that imbalance hits full force, prices could move sharply and availability could become a real challenge. Those who wait too long may find that simply buying silver at the current price is no longer possible, or at least much more expensive. This is the moment to think, plan, and position wisely. Silver is not a gamble. It's an opportunity that comes with awareness and preparation. Those who understand its dual role as both a financial hedge and a critical industrial metal can navigate the upcoming shifts with confidence. Ignoring these signals might feel comfortable today, but it comes at a cost tomorrow. It's also crucial to remember that timing matters. Markets can remain calm while pressures build behind the scenes. By the time everyone notices, the move may already be underway. That's why education and observation are key. Watching trends, monitoring premiums, understanding industrial demand, and following trusted sources can make all the difference. This is exactly why Silver and Gold Insider exists. To cut through noise and help viewers see what's really happening before it becomes obvious. And here's the part that matters most. This isn't speculation, for entertainment. We're talking about tangible realities. Mined silver. Global demand, industry scarcity. All of these forces are converging right now, quietly but relentlessly. The longer you wait, the smaller your window becomes to act before the next major leg up begins. So, what can you do? Start by educating yourself and observing carefully. Look at physical silver availability. Track premiums. Pay attention to reports from reliable sources. Talk to knowledgeable people, not just social media hype. Every small step you take now can make a meaningful difference when the market shifts. And most importantly, don't let fear or indecision dictate your choices. Let clarity and preparation guide you. Before we finish, if this video helped you understand what's really happening in silver, make sure to comment below with your thoughts. Are you already investing in silver, or are you watching and waiting? Sharing your perspective helps the community, sparks discussions, and can even alert others to what's unfolding. And don't forget to share this video with friends, family, or anyone who wants to understand why silver could move dramatically soon. The more people who understand the realities behind the market, the better prepared everyone can be. Remember, silver's next move will not wait for headlines, and it certainly won't wait for consensus. It will reward those who are prepared and understand the signals. At Silver and Gold Insider, we'll continue to bring you updates, insights, and analysis so you can stay ahead of the curve. Watch carefully, stay informed, and be ready because the story of silver is just beginning. And the next chapter promises to be unlike anything we've seen in decades.